This is an emergency broadcast. I need you to turn off the TV. I need you to close the door to your office. I need you to tell anyone within earshot that you cannot be disturbed for the next 27 minutes, because what I am about to show you is the most important financial event of your lifetime. And if you do not understand what just happened in the last 8 hours, you are going to wake up 6 months from now wondering why your savings account buys half of what it used to. It is Wednesday, January 29th, 2026. And at exactly 2 p.m. Eastern Standard Time, the Federal Reserve just blinked. They just flinched. They just showed the world that the most powerful central bank in human history is no longer in control. Jerome Powell, the chairman of the Federal Reserve, the man who is supposed to protect the value of your dollar, just walked into a press conference and announced that interest rates will remain unchanged at 3.5% to 3.75%. Now, the mainstream media is spinning this as a non-event. They're telling you it is a hold. They are telling you it is exactly what the market expected. They are lying to you. This is not a hold. This is a surrender. This is the Federal Reserve admitting that they have lost the war. They have lost the war against inflation. They have lost the war against the bond market. And most importantly, they have lost the war against President Trump. Ladies and gentlemen, this is the money code. And we need to decode what Powell's decision means for your money, for the dollar, and for the price of silver, which just exploded to $118 per ounce in the minutes after the announcement. We need to decode why gold just smashed through $5,500, breaking every record in the history books. And we need to explain why 2 members of the Federal Reserve's own committee just publicly dissented against Powell's decision, voting for rate cuts, signaling that the central bank is fracturing from within. You have to understand the context of this meeting. This was not a normal FOMC decision. This was a showdown. This was high noon. On one side, you have Jerome Powell trying to maintain the illusion that the Fed is independent, that they make decisions based on data, not politics. On the other side, you have President Trump, who went on national television 48 hours ago and told the world that dollar weakness is great. Trump didn't ask Powell to cut rates. He didn't suggest it. He demanded it. And when Powell walked into that room today, he had a choice. Does he raise rates to defend the dollar and risk the wrath of the president? Does he cut rates to please Trump and admit that inflation is out of control? Or does he freeze, do nothing, and hope the problem goes away? Powell chose the third option. He froze. He held rates. But here's what the mainstream media won't tell you. A hold is not neutral. A hold, when inflation is running at double digits in real terms, when the dollar is at a 4-year low, when the bond market is screaming for intervention, is effectively a rate cut. It is a passive cut. Powell just told the market, I'm not going to fight this. I'm not going to defend the dollar. I'm going to let it burn. And the market heard him loud and clear. Within seconds of Powell's statement, within literal seconds, the dollar index dropped another 0.5%. Gold shot up $200 in 15 minutes. Silver went absolutely parabolic. It ripped from $118 to $118 in a single candle. That is a $4 move in minutes. That is not a rally. That is a panic. That is the market screaming that the central bank has abdicated its responsibility. But it gets worse. It gets so much worse. Because while Powell was standing at the podium trying to sound calm, trying to sound in control, 2 members of his own committee, 2 voting members of the Federal Open Market Committee, publicly dissented. They voted against the hold. They wanted rate cuts. Do you understand what this means? This means the Fed is not united. This means there is a civil war happening inside the central bank. Some members want to fight inflation. Some members want to save the stock market. And when a central bank is divided, when the generals are fighting each other instead of fighting the enemy, the currency dies. This is the moment. This is the inflection point where the Federal Reserve loses all credibility. Because if they can't even agree on what to do, how can the market trust them to do anything? How can the world trust the dollar when the people who print it can't decide whether to print more or less? And while Powell was fumbling through his press conference, while the Fed was showing the world its weakness, President Trump was sitting in the Oval Office smiling. Because Trump just won. He didn't need Powell to cut rates. He just needed Powell to do nothing. He needed Powell to stand aside and let the dollar collapse. And that is exactly what happened. Trump's strategy is now crystal clear. He's not trying to save the dollar. He's trying to devalue it. He wants a weak dollar because a weak dollar makes American exports cheaper. It makes American debt easier to pay back. It inflates away the $40 trillion national debt. Trump is playing the long game. He is willing to sacrifice your purchasing power, your savings, your retirement, to fix the structural problems of the U.S. economy. And Powell just gave him the green light. This brings us to the most important question of the day. If the Fed just surrendered, if the dollar is dying, where does the money go? Where do the trillions of dollars sitting in bank accounts and money market funds and treasury bonds, where do they run to when the currency is collapsing? The answer is screaming at you from the charts. The money is running to gold. The money is running to silver, and the velocity of that flight is accelerating to levels we have never seen before. We need to talk about $118 silver. We need to talk about why this is not just a new high. This is the beginning of a vertical move that could take us to $200 by spring. Let's go to the charts. Let's see what the breakout is telling us. You need to stop looking at silver as an investment. You need to stop thinking about it as a commodity that goes up and down based on supply and demand fundamentals. What you're watching right now is a monetary event. Silver is not rising because industrial demand is strong. Silver is rising because the dollar is dying. And when a currency dies, the only assets that survive are the ones that cannot be printed. Look at the price action from the last 24 hours. Yesterday, before the Fed meeting, silver was trading at $114. The market was nervous. The market was waiting to see what Powell would do. And the exact second that Powell said we are holding rates, the floodgates opened. Silver jumped to $116, then $117. And within an hour of the press conference ending, we touched $118. That is a $4 move in 60 minutes. That is a 3.5% gain in 1 hour. Do you know what kind of assets move 3.5% in an hour? Penny stocks move like that. Cryptocurrencies move like that. But silver? Silver is a $100 billion market. Silver is supposed to be stable. The fact that it is moving this violently tells you that we are not in a normal market anymore. We are in a crisis. We are in a moment where the buyers are so desperate to get out of dollars and into real assets that they don't care about the price. They are buying at any price. They are panic buying. And here's the kicker. The $118 you are seeing on your screen, that is the paper price. That is the price of a futures contract on the COMEX. That is a promise to deliver silver at some point in the future. But if you actually want to buy physical silver today, if you want to walk into a coin shop or order online and get a bar in your hand, you are paying $130, $135, maybe more. I called 3 dealers this morning after the Fed announcement. All 3 told me the same thing. Premiums have gone insane. A silver eagle is $20 over spot. A generic round is $12 over spot. The spread between paper and physical is now 10% to 15%. That has never happened before. Not in 2011, not in 2020, never. This is the great decoupling. This is the moment where the paper market and the physical market split into 2 different universes. The paper market says 118. The physical market says 135. And that gap is only going to get wider because the physical market is running out of metal. Let me show you the data that proves the shortage is real. Let me show you the inventory numbers that the mainstream media is hiding from you. In the last 7 days, just the last 7 days, 33.45 million ounces of silver were withdrawn from the COMEX registered vaults. That is metal that was sitting there, available for delivery. And someone came in and said, I want it now. I want it in my truck. I want it out of the system. And they took it. 33 million ounces in 1 week. That is more than 4% of the entire global annual mine supply gone in 7 days. And it's not just the COMEX. The Shanghai Gold Exchange, the largest physical trading platform in the world, just reported that their registered silver inventory is down to 18.4 million ounces. That is a 70% decline from 2020 levels. They are running on fumes. They are running on empty. And when the vaults are empty, the price doesn't just go up. The price goes vertical. Because at that point, it's not about supply and demand. It's about survival. It's about who has the metal and who doesn't. And the entities that don't have the metal, the entities that are scrambling right now to find any ounce they can get their hands on, are the same entities that have been shorting silver for decades. We need to talk about the banks. We need to talk about the short squeeze that is about to obliterate the bullion desks. Because what is happening right now is not just a price rally. It is a hunt. It is a hunt for the shorts. And the shorts are bleeding. For years, the big banks, JP Morgan, HSBC, Bank of America, have controlled the silver market by selling paper contracts they don't have. They short silver. They bet the price will go down. And because they control the market, because they have infinite capital and infinite leverage, they usually win. They suppress the price. They cap the rallies. They make billions doing this. But there's one thing they cannot control. They cannot control the physical market. They cannot print silver bars. And right now, the physical market is eating them alive. Here's what's happening behind the scenes. The banks are short. They sold contracts at $80, $90, $100, betting the price would crash. But the price didn't crash. The price went to $118. Every dollar the price rises, the banks lose money, billions of dollars. And because they are short paper contracts, they have to deliver physical metal if someone demands it. But they don't have the metal. The vaults are empty, so they have 2 options. Option 1, buy silver in the physical market to cover their shorts. But if they do that, they drive the price even higher, which makes their losses even worse. It's a death spiral. Option 2, default, refuse to deliver, declare force majeure, admit to the world that the paper market is a fraud. We are approaching option 2. We are approaching the moment where the banks have to choose between bankruptcy and fraud. And I'm telling you right now, they are going to choose fraud. They are going to declare force majeure. They are going to say, we cannot deliver the silver because of unforeseen circumstances. And when that happens, when the COMEX defaults, the paper price becomes irrelevant. The only price that matters is the physical price. And the physical price is going to $500, $1,000, who knows? Because at that point, silver is not a commodity. It is money. It is the only money that works when the system collapses. But while the banks are panicking, while the Fed is surrendering, while silver is exploding, there's one asset that is moving even faster. There's one asset that just broke through a psychological barrier that even the most bullish analysts didn't think we would see until 2027. Gold doesn't lie. Gold doesn't care about your politics. Gold doesn't care about your opinions. Gold is pure objective truth. It is the thermometer of the financial system. And right now, that thermometer is reading fever. It is reading crisis. It is reading collapse. Yesterday, gold was trading at $5,300. That was already a record. That was already a level that made the mainstream media uncomfortable. But today, 8 hours after Powell's surrender, gold is trading at $5,220 per ounce. Let me say that again, $5,220. That is a $220 move in one day. That is a 4% gain. Gold doesn't move 4% in a day. Gold is supposed to be stable, boring, safe. But right now, gold is acting like a rocket ship. It is acting like the market is in total panic mode. And here's why. Gold is not going up because people love gold. Gold is going up because people hate the dollar. Every central bank in the world, every sovereign wealth fund, every billionaire family office is looking at the Fed's decision today and realizing that the U.S. is not going to defend its currency. The U.S. is going to print. The U.S. is going to inflate. The U.S. is going to destroy the purchasing power of the dollar to pay its debts. And if the U.S. is doing that, if the world's reserve currency is being debased by design, then every other fiat currency is worthless too. The euro is worthless. The yen is worthless. The yuan is worthless. The only thing that has value is gold. The only thing that cannot be printed is gold. This is why central banks are buying gold at record levels. In 2025, central banks bought more gold than any year in history. And in January 2026 alone, they have already purchased more than they did in the entire first quarter of 2025. They know. The central bankers know that the system is breaking. They know that fiat currency is dying. So they are buying the only asset that will survive. And this buying is creating a feedback loop. When central banks buy gold, the price goes up. When the price goes up, other central banks panic and buy more, which drives the price up even further. We are in the vertical phase of that loop right now. We are in the part where the momentum becomes unstoppable. And the target that the charts are screaming at us, the level that gold is mathematically destined to hit based on the current velocity, is $6,000 by the end of February. That is 2 weeks away. $6,000 gold in 2 weeks. If that sounds insane to you, look at the chart. Look at the velocity. We moved from $5,000 to $5,500 in less than a month. The next $500 will take half that time. But gold is not the only story. Gold is the shield, silver is the spear. And while gold is breaking records, silver is moving twice as fast. Let me show you the ratio. Let me show you why silver is about to catch up to gold in the most violent way possible. For decades, the gold to silver ratio has been broken. It has been sitting at 80, 90, even 100 at times. That means it took 100 ounces of silver to buy 1 ounce of gold. That is historically absurd. The geological ratio is 8 to 1. The historical monetary ratio is 15 to 1. So when the ratio is 90, it means silver is massively, criminally undervalued compared to gold. But look at what just happened. With gold at $5,020 and silver at 118s, the ratio just dropped to 46.8. It was 70 last week. It was 90 6 months ago. And now it is 46. The ratio is collapsing. The gap is closing. And when the ratio collapses, it means silver is rising faster than gold. It means the market is rotating from the safe, boring shield into the high beta, explosive spear. Here's the math. If gold stays at $5,500 and the ratio returns to its historical average of 30, which is conservative, silver goes to $183. If the ratio goes to 20, which happens in every currency crisis, silver goes to $275. And if gold doesn't stay at $5,500, if gold goes to $6,000, $7,000, which it will, and the ratio corrects to 15, we are looking at $400 silver by the end of the year. I know that sounds insane. I know your brain is telling you that is impossible. But the math doesn't lie, the ratio doesn't lie, and the ratio is telling you that silver at 118 is still cheap. Silver is still the opportunity of a lifetime. Because gold already moved, gold already doubled, tripled from its lows. But silver is just getting started. And while the price is exploding, while the ratio is collapsing, there is one country that is watching this unfold with absolute terror. There is one country that just realized that its currency controls, its export bans, its desperate attempts to hoard silver have backfired spectacularly. We need to talk about China. We need to talk about the silver lease rate crisis that is currently destroying the credibility of the Chinese financial system. Let's go to Shanghai. Let's see what happens when a government tries to control a market it doesn't understand. On January 1st, 2026, the Chinese government implemented a new export control policy. They said that silver could only be exported by state-approved entities. They said this was to protect China's strategic resources. They said this was to ensure supply for their solar panel industry, for their electric vehicle industry, for their green energy transition. But what they really did was create a trap. They created a trap for themselves. Here's what happened. The moment China banned private exports of silver, the global market realized that Chinese supply was no longer available. Silver that used to flow from Chinese mines to global refiners to the COMEX was now stuck in China. It was locked behind a wall. And when supply gets locked up, when metal disappears from the market, the price goes vertical, which is exactly what we are seeing. But it gets worse for China. Because while they were locking up the supply, they also created a massive internal demand crisis. Chinese solar manufacturers, Chinese EV makers, they need silver to build their products. And now they can't get it. They can't import it because of the export ban. And they can't buy it domestically because the internal price in China is now higher than the global price. The Shanghai premium, the amount that Chinese buyers are paying over the COMEX price, is now $8 to $12 per ounce. That is insane. This creates a feedback loop. The manufacturers can't get silver, so they bid up the price. The higher price attracts more buyers, which drives the price even higher. And the Chinese government, instead of fixing the problem, instead of lifting the ban, doubles down. They tighten the controls, they increase the restrictions. They are trying to control a market with $100 billion of global liquidity using bureaucratic decrees. It doesn't work. It never works. The proof that it doesn't work is the silver lease rate. The lease rate is the interest rate that banks charge to lend silver. Normally it is 0.3%, maybe 0.5% in times of stress. But right now, as of this morning, the silver lease rate in China is 8%. Let me repeat that, 8%. That is 16 times higher than normal. That means Chinese banks are so desperate to hold on to their silver, so terrified of lending it out, that they are charging 8% interest just to part with it for a few weeks. An 8% lease rate is the signal of a structural breakdown. It is the signal that the market has no trust. It is the signal that the entities that are supposed to provide liquidity, the banks, the refiners, the vaults, have nothing left to provide. They are empty. They are frozen. They are broken. And this Chinese crisis is spilling over into the global market. Because China is the largest producer of refined silver in the world. When China locks up its supply, when Chinese refiners can't export, the rest of the world starves. Europe starves. America starves. The COMEX starves. And when the COMEX starves, the price goes to $118, $130, $200. This is the unintended consequence of government intervention. China thought they could control silver. They thought they could hoard it, weaponize it, use it as leverage. But all they did was accelerate the price explosion. All they did was prove to the world that silver is too important, too scarce, too critical to be controlled by any single government. And while China is panicking, while the Fed is surrendering, while gold is at $5,500 and silver is at $118, there's one group of people who are sitting in silence. One group of people who know that the moment they have been waiting for has finally arrived. We need to talk about the stackers. We need to talk about you. Because if you have been holding silver for the last 5 years, if you ignored the noise, if you ignored the manipulation, if you stacked through the dips and the crashes and the doubt, today is your vindication. Let's wrap this up. Let's deliver the verdict. So here's the verdict. We have just witnessed the most important Federal Reserve meeting in modern history. Jerome Powell walked into that room with the weight of the world on his shoulders. He had the President of the United States demanding a weak dollar. He had the bond market screaming for intervention. He had inflation running hot. He had gold at record highs. And he did nothing. He held rates. He surrendered. And the market, the cold, calculating, ruthless market, punished him immediately. The dollar dropped. Trump won. Trump got exactly what he wanted without Powell having to cut rates. The dollar is dying. The currency is being debased. And the flight to hard assets is accelerating at a pace that is historic, unprecedented, and terrifying. If you're holding cash right now, you are holding a burning piece of paper. Every day you wait, the dollar loses value. Every day you hesitate, the price of silver goes higher, the premiums go wider, the availability goes lower. The window to convert your dying fiat currency into real money, into silver, into gold, is closing. Do not wait for a dip. There is no dip coming. The Fed just told you they will not defend the currency. Trump just told you he wants it weak. China just told you the supply is locked up. The lease rates just told you the banks have no metal. The charts just told you we're going vertical. Every signal, every data point, every indicator is screaming the same message. Get out of dollars. Get into silver. Do it now. This is the money code. The Fed surrendered today. Powell blinked. Trump won. Silver is at 118. Gold is at $5,520. And the end game has begun. Stack hard. The system is breaking.